You become wealthy when you stop relying on other people's banks. You become wealthy when you control your money, the flow of your money, and what your money can do for you. You become wealthy when you take back the banking functions in your life. The time is now, because now is all that matters. The markets are melting down. Brokerages and crypto accounts like Voyager are declaring bankruptcy. We're in a spiral wind down. And where does it end? Well, that's the question. But the question really shouldn't be, where does this all end? It should be, what are you doing today, right now, at this moment, to get ready for the biggest effing opportunity of your life? That's the question I pose for you today. Because, hey, listen, we can complain about Voyager freezing everybody's accounts. I know people that have lost and had, well, it's not lost yet, but had 400 grand frozen. I know of different things going on out there. There were people's money's frozen. This is just the beginning. You think this is bad? Shit. This isn't even the preview for the movie. This is when you sit down at an AMC theater, which I hope you didn't buy that stock, and they start playing all the previews. 30 minutes later, the actual preview starts, and then the movie's next. We haven't even got through the commercials about the popcorn and the soda pop yet, folks. The party is just getting started. Are you invited? Well, this is one party you certainly don't want to be part of. And today on this wealth webinar, we're going to dissect key things that you need to be looking at, some key things that you need to be doing. And we're going to finish this off with a hurrah, with a grand finale about the one thing you all need to be doing right now. So let's dive into this. Have you been watching the news? Holy crap. I don't even know the last day that we had a positive up in the market, but yet everybody is still hopeful, which is the thing that scares me. Hope is a powerful thing, and I love it. But hope isn't going to help you in this one. Listen, folks, since 2008, the Fed and the government had figured out the keys to the printing press. The thing went pretty fast prior to that, but now they know how to put that thing in sonic mode or supersonic mode, whatever you want to call it. You've all seen Star Wars. It's where you hit the button and like all you see are the little lines. Yeah, they figured that out with the printing press. 5.1 trillion. If you go back to 2010, we're well over 10 trillion. Did you realize back in 2008, if any of you are old enough to remember this, did you realize that in 2008, they printed an unprecedented bailout? Who can tell me how much money? The unprecedented amount that was going to save the entire financial system from collapse. And make no two ways about it, folks. 2008 was the closest we've ever come to a complete and utter failure of the financial markets. How much money did they print? Okay, Jake said 800 billion. Chris said 700 billion. It was $900 billion. It was unprecedented. $900 billion. Shit, they send that to Ukraine now for a war that we shouldn't even be fighting. Well, we're not fighting it, but are we? Are we fighting the war or are we not? Well, it seems like it with the sanctions and everything else that all drives to your pocketbooks. Because the last time I checked, the gas pump, here in New York, $5.69 is what I paid for premium fuel in the vehicle the other day. Now, that's nothing. If you live in California, we have people on here from California. What are you paying for your gas per gallon? Is it $7, $8? Well, folks, it'll be 10. I know we had a little pullback in the price of oil. It went down below 100,000. I want all of you to think about something. Price of a barrel of oil is under $100. Did you realize the last time a barrel of oil was under $100, fuel prices were in the $2 range? $2, $5. So who's screwing who here? Well, that's to be determined. I think there's a little bit of hanky-panky going on with the corporations, going on with the government and everything else. We should be energy independent. We were, and we will be again. But today, well, energy independence means you're digging into your pocketbook. What else just happened? Well, let's talk about what just happened again. I've been talking about this for too long. If any of you have been around the campfire with me, you've heard me say this, gosh, months ago. The inverted yield curve. Okay, let me just dissect this. You saw it in the news, or maybe you missed it, but it is the one indicator that solidifies and signifies, and throughout history, as long as it's been around, it has always proved right, except for one time. When the yield curve inverts, it's recession time, folks. The party is beginning. Okay, and the party, just so you all know, so we're clear, is the recession. Okay, anyone Anyone confusing that? The party I'm referring to isn't a real party you want to show up to. It's the recession, but the party is actually going to be good for you if you listen to what we're teaching you, because this will be the opportunity of a lifetime. So when the inverted yield curve happens, it's the sign. This, I believe, is, and I might have it wrong, we've been saving them, the third or fourth time the yield curves have inverted. So here's what it means. So a lot of you are like, inverted, what, you speaking English here? Okay, come on, not Japanese, English. We need English today. So let me explain it. There's durations for bonds you buy from the US government, the treasury bonds. Okay, you can buy a 2-year bond, a 2-year treasury bond. You know what that means? In 2 years, it matures and the government gives you back all your money and you got paid interest the whole time. So we're clear about the 2 and the 10-year, right? One is 2 years and you get all your money back. One is 10 years, you get all your money back. Now, trick question, but not really. Which one should pay you a higher interest rate? Go in the chat. Which one, the 2 or the 10-year, should pay you a higher interest rate? That's right. Daniel said the long. The longer out you go in a duration, the longer your money's tied up, the more you should be paid. Of course, there's more risk in the long term. Okay. Dale said 10. Francisco said 10. Absolutely. The 10-year treasury should always pay you more in interest than the 2-year. So what does it mean when it inverts? It means the 2-year pays you more than the 10-year. Do you know why? It's because it's a read of the markets. It's saying that the safer play is 10 years from now. It's safer than 2 years from now. Why would that be? Well, that's because the markets are telling you this thing's going to go down like the Titanic. Actually, it's going to go down way faster than the Titanic. But a lot of people out there, and I listen to a lot of gurus. I'm trying not to watch as much on YouTube and Facebook, but all these people are saying, oh, buy now. It's a buying opportunity. Pick it up. It's a bargain. Folks, if any of you are buying stocks right now and you're not a professional stock trader that understands strategies, options, and derivatives, stay the F out of the market, because this that you're seeing is not a buying opportunity, is actually a trap. And if you buy today, you will lose a lot more. And some of you are like, nope, I bought it and it went back up. Yeah, well, it's going to go back down. It hasn't gone back up. I mean, maybe certain sectors have. There's always the winners and the losers. But in this one, there's going to be nothing but losers, except for a few safe places where money can go. And they will be few and far, and we're going to hit them. So how far down could this thing go? Well, if you take all the economists that I studied, the Ray Dalios, who's not an economist, but he's definitely a voice in the markets. You take the Harry Dent Jr.'s, the Jim Rickards, you take the Granthams, you take all of them, and you really listen. How much further can we go? Just so you all know, we are down to date more than 20%. NASDAQ's even more, but we're down 20%. How's that feel? Feels like you're going to be working another year or two in retirement, until retirement, right? Feels like you might have to do a little extra. Feels like life's not going to be quite as easy. Because as your market goes down, as your statement shows you're losing money to date, 20%, you start thinking, okay, what do we have to change? Well, if that's what you're thinking, good. You should have already made changes when we told you to get out pretty close to the damn top. But yes, was it a bit early? Yeah, but in a couple months, you're not going to be saying that it was too early. Anybody that listened and got out of the markets is going to be saying, holy crap, that was awesome. So how much further? Well, I can tell you, and this is speculative, you can expect to see another 40 to 60% drop. No one thinks that's possible. There's no way the market could give up another 60%. Well, actually, there's a lot of ways. If you just look at a chart, the Dow Jones, the S&P 500, I don't care which one you look at, and you look at where we were at our highs a few short months back, when we were like screaming at you, telling you to get out of the markets, move to safe places, but you didn't, or some of you did. Okay, from there to where we're at is 20%. And if you look at a chart, and I can pull one up if anyone wants, and you look at where we have the potential to go. Now, let me speculate and say where I think we could go and where it's likely that we will. You got to go all the way back to 2011. That's the first stopping place. Okay, that's roughly about a 40% fall from where we're at now. But realistically, where could we really end? The lows of 2008, somewhere around there. Now, will that happen? I don't know. I don't know. Possible. Because when you look at support and resistance, this thing went up so fast and so aggressively that it's going to come down faster and more aggressively. So 40 to 60% is very likely from where we're at. Now, 20% doesn't feel good. How's 40 to 60 going to feel? It's not going to feel like, oh, guess I'm going to work a couple more years. It's going to feel like I'm going to work the rest of my life, and my kids are going to have to go to work at the age of 14. This one will be the worst one of your lifetime. I'm not trying to scare you. I'm trying to be very realistic. because this is the end of a long-term debt cycle. And a lot of people that say that that's not true clearly don't understand history, because the scariest part about this particular thing that we're about to see, this recession, or what eventually will probably become a depression, is none of us, no one on this live, not, none of the 121 people on here right now have ever seen this. Do you know why? The long-term debt cycle is a 75 to 100 years. So unless you were around during the 1930s, you have no clue what this looks like, smells like, or even feels like, because that was the last one. And this is the new one. There's nothing that can change it. There's nothing that can stop it. I had somebody on our What the F Happened say, well, the government will just print more money. No, they won't. They've already said they're not going to, because what is the government? And let's take the government out, the talking heads and the puppets. Really, who's in charge? The Fed. The Fed is not federal, and they are not a depository. So the Fed, okay, the Federal Reserve is nothing of the sorts. The Federal Reserve is in control because they control the monetary supply. So the Fed has already said, you've seen it on the news, you've seen it everywhere, they are there to tame the inflation beast. That's right. They're going to get a hold of that inflation at any cost. So what does that mean? Yes, that means tanking the markets, driving interest rates much higher than they are today. Yes, that means killing the economy. They will do all of those. And that does not include printing more money, just so you know. Matter of fact, they're going to do the exact opposite of printing money. They're going to take back some of the money that they printed. Some of that $5.1 trillion that some of you got in EDIL loans, PPP loans, maybe those stimulus checks that you got, they're going to start taking some of that back. Do you know how? Well, when the Federal Reserve prints money, okay, and the Fed doesn't print money, the Treasury does, but the Fed controls the supply. So they essentially decide how much to print. So when they print money, okay, what they do is this money doesn't just get given to the government. No, it gets exchanged. The government, and I'll just do this with an example, prints bonds. If we just wrote IOU really big on this, which I'll do just so that you guys can all have the visual, the government does a piece of paper on the full faith and credit of the US government, it's an IOU. And then the Fed has the money and they just exchange. And on the Fed's balance sheet, this IOU goes as an asset into the government. Now the government's got the money that they hand out to the citizens. They do different things, infrastructure bills, green initiatives, whatever they do with the money that prints. Half of it, we don't even have a clue what they do. That's the scariest part. So that's what they do. Now, the Fed, what they're going to do is they're going to start redeeming some of those IOUs. Why? Because they've matured. Remember, we talked about the 2 and the 10 year? Well, some of the bonds the Fed's holding, which total over $9 trillion, just to put it into perspective. Like, remember I said unprecedented was 900 billion? Shit, folks, they throw around $1 trillion. They throw around $2 trillion like it's freaking peanuts. 900 billion was unprecedented in 2008. Don't think that things have changed that much, that today 900 billion is the equivalent of 5.1. No, things have not changed that much where the same dollars are same dollars. No, it's that much more. And they have that all sitting on their balance sheet. So they're going to start redeeming some of those. And when they redeem them, who's got to pay the Fed? The capital markets. That's right, Wall Street. It sucks the money back out of the system. And you know what that does to you? Makes money harder to get. Those 0% car loans that we've become accustomed to, that have literally like been one of those things, one of the main questions with the infinite banking concept and the strategy I teach about getting all the money back for all the cars you're going to buy, drive, and own. One of the biggest objections is, well, I can get a 0% loan. Toyota and GM and Ford, I get a 0% loan. You may still be able to get them because they've got to get rid of some inventory right now because they have a little overproduced cars, but that hasn't happened yet. You might get them for a little longer, but that will be gone. Easy money is going to be gone. Getting a mortgage, getting a line of credit, getting a loan, getting a HELOC, getting anything that we can get today so easily because there's a lot of money in the system, in a year from now will be a different story. It will be a lot more difficult, more stringent. They will require more paperwork. They will require better credit scores. They will require all the things that so many people do not have today. But not just that. When they begin this process, they will also begin the process of literally destroying the asset prices. It's the only thing that can happen. Okay, because when they suck the money out, when they take liquidity away, they're also taking away what we today think will never end, and that is these asset prices that we've gotten used to. People don't believe this is possible because they've never seen it. Okay. It'd be like saying, hey, UFOs exist. Well, I've never seen one. I don't think they do. Well, that's for you to decide. Do they exist? Do they not? I don't know. But it's the same thing. You've never seen this before. Most millennials have never gone through a recession. They know it because they hear it, but they don't understand it because they've never lived it. Most of you on here, if you're older, you've seen this. You remember 2008. It was a doozy. Let's not call the pandemic drop a recession, but technically it really was, but then it shot right back up because they printed money. Don't think that was anything that was smart. They just printed a lot of money, which bounced the market, which created the bigger bubble. It was a Band-Aid. Who said that? Michael? Yeah, they put a Band-Aid on. Well, Band-Aids lose adhesive. They fall off eventually. Does it mean your boo-boo's all fixed up? Nope. The boo-boo might still be there. Like, listen, if I put a Band-Aid on my elbow or my leg, my skateboarding wounds, like the Band-Aid falls off. Does it mean that this is all better? No. I don't know how to put it to you, but if you haven't made some decisions with your investments today or right now, or if you're not really thinking about this, getting on the phone with your 401k provider, calling your financial advisor and saying, hey, listen, I don't want to work until I'm 80. I don't want to be the 95% says Social Security. And everybody knows what I mean by that, right? Out of 100 people, only 5 are going to be financially secure. The other 95% are not going to be financially secure. That's what I mean when I say 5 and 95. Creation versus conformity is what creates that dynamic. Even in a country like the United States of America, the greatest country on earth, the land of opportunity, that is why so few people financially succeed. It's because they conform. Conformity is so much easier. Just conform to what everybody tells you to do. Just follow the masses. Just do what everybody else tells you to do. Don't think for yourself. Let them think for you. Folks, look behind me. It says control the environment, control your money, control your life, and control your future. You can control all of them, just like a plane. A pilot cannot always control the environment it flies in. They can do a good job of picking different times to fly so the environment is optimal for the airline. Maybe not commercial, but private. Private airlines can fly with a tailwind. A tailwind is what you want behind your money. But the beauty about your life, your finances, your money is you have the ability to pick the environment in which you operate. You don't have to abide like a pilot. You pick the environment. But to date, I got most people, maybe not all of you, but most people pick the wrong environment to fly in, pick the wrong environment to live in, pick the wrong environment to put their money in. They give up control because it's easy. Just do what everybody else. Put the money in the bank. That's what they say. Oh, well, let's buy stocks. Do you even know what the hell you're buying? You should only invest in things you know, like, and understand, not things that they know, like, and understand, because that's what benefits them. Like going back to Voyager. Okay, let's just talk about crypto for a second. I like crypto. I fully, truly believe in the utility of what Bitcoin does. Truly. Do I think it's a short play? No. Do I think you're going to lose if you buy today? Absolutely. Am I losing right now? Yes. I don't have a big portfolio and I could lose it tomorrow and yeah, it would suck, but it's like 31 grand. That's all I got. 31 grand as of today. I checked right before. Bitcoin sitting at 20. I own 2 different ones. I own Bitcoin and Ethereum because I believe in what they do and I know, like, and understand them. So the reason I bought them, and I've been buying them, me and Shauna were talking, I've been buying them as they've been going down. We've been sitting at this $19,000, $20,000 level. Now, unfortunately, a lot of people have bought crypto not at 20,000, not at 25, not at 30. They bought it at 60 because it felt good to follow everybody else in because every guru was a master of disaster back then. Every crypto guru was right when the market was right. Every real estate investor, every real estate coach is right when the market's right. But when the market isn't, when the environment changes, they're wrong. But they made all their money already. They're out. Doesn't matter. You are left holding the bag. Just like when the government prints money, you are left holding that bag. Until you make the decision to change your environment, until you make the decision to control your money, nothing can change. So let's get into it. I'm going to let this go. But first, I want you to understand the headwinds and the tailwinds today. The headwinds are the things that are really going to hurt you. They're going to stunt your growth. They're going to stop the growth of your money, and they're going to prevent you from reaching wealth in the right time frame. Taxes, inflation, volatility, market losses, market timing, supply and demand pressures, investor sentiment. That's a big one. Monetary policy. Almost every one of these things you have zero control over. You don't control taxes. You don't control inflation. You can, in a certain realm, control volatility, but at the end of the day, you don't control that. Market losses, you definitely can control, but you don't because you choose not to. Okay. Market timing, you can't time the market, but some people try. Supply and demand pressures, you can't control that. Investor sentiment, you can only control your investor sentiment. Monetary policy, you are out of control out of every one of those headwinds. All of them are out of your control. You can't do anything to move the needle, with the exception of maybe your market losses, because you could always buy low and sell high. But how many of you, can we be honest here? How many of you actually took your gains off the table the last couple months? Well, I commend all of you. I really do. Because that was a hard decision to make. You did the opposite of what everybody else was doing. You went against the grain. Everybody was buying and you were selling, and you probably got ridiculed for it. If you talk to any of your coworkers about it, I bet you they were like, that's so stupid. Who, Chris Naugle? Why would you listen to that guy? What does he know? Well, he's not trying to sell me anything. I don't know. He seems like he knows what he's doing. Damn, we got that right, didn't we? You can't time the market. I'll never, ever, ever get the market timing right because you can't do it. Ray Dalio can't. Why do you think I can't? But I certainly was right about the patterns. I certainly was right about the signs. And I certainly was right about the timing of when you should take your gains off the table, because there's no right time. When you make money, you should take your gains off the table. If you make what you want, you should set rules of engagement. Can't control those, but what can you control? How about the tailwind? Can your money exist in a place that pays you uninterrupted compound interest? Absolutely. That YouTube video I was playing earlier tells you all about that. I can show you exactly how to do that. Can your money exist in a place where it's tax-free so that you don't have to deal with the headwind of taxes? 100%. You could put whatever dollar amount you want into a Roth IRA. The rest could go in your private banking policies, those stupid, specially designed and engineered whole lives. How about the legacy that you plan for your future family? Okay. The family doesn't even exist today. Can you control that? Absolutely. You can set things in place today through trust planning, through foundations with Solomon, who will be here in July 30th and the 31st. We got an event. If you don't know about it, Solomon will be here to tell you how to not just create a legacy, but how not to pay taxes legally, just like the wealthy. Warren Buffett said, my secretary pays more money in taxes than I do. Yeah, he knows how this game works. In the tax game, folks, there's only two different people, the informed and the uninformed. Which side do you want to be on? What side? Because you get to pick. The uninformed, guess what they do? Pay more taxes. The informed, guess what they do? They got a dial. They pay the amount of taxes based on the things that they need to buy and the income that they need. They pay taxes based on a controlled environment because they controlled that. Tax deferral. Can your money sit in a place where you don't pay taxes? Yes. Can your money sit in a place where it has guaranteed growth? Maybe not all of it, but yes, a big chunk of it. Can you protect your assets? 150%. Private Money Club. How do you protect your money in Private Money Club? There are risks with lending money, but how do you protect it? If you're not first, you're last. That's it. Lend in a first secured position. Make sure that people do a personal guarantee. Make sure that you actually check to see what their assets are and their liabilities are. Ask them, send me your asset statements. And if they won't, don't lend to them. That's that simple. Oh, I don't want to show you that. I had somebody do that. This guy, Mike, he wouldn't show me any of his financials, wanted to go in business on a deal. So I asked him, I said, pull your pants down. Not really. I said, just show me your assets. You say you got all this money, prove it. Just show me your tax returns. Come on, that's public knowledge. Show me your tax. Nope. Wouldn't show me anything. I said, see you later, dude. Like, I like the guy, but hey, listen, like transparency is everything. Prove to me. That's how you protect. You invest in things you know, like, and understand with people that you trust, people that have a history, that have wisdom in something, and wisdom comes from failing. Passive income. Any of you know how to make passive income? Absolutely. You control all of these and hardly any of these. So how do we beat inflation? I've talked about this a lot. I'm going to give you some tactical things here real quick. So let's just hit some of the headwinds. Inflation. All right, let me get a gauge real quick for the audience. How many of you are worried about inflation right now? How many of you really see inflation as being a big problem in your life? So we got some people that are worried about inflation. Can I ask why? Can anyone tell me why you're so worried about inflation? Why? Anyone, like, I'm just looking for one person to tell me why. All right, worried inflation will eat away my HELOC note spread. Okay, it's a good one. Paycheck not worth as much. All right, how long do you think inflation will last? Remember, the Fed is raising interest rates at an alarming rate at high increases, 0.75%. That was more than we ever thought in the beginning when they said they were going to raise them. So how long do you think inflation will be around? I mean, is it going to be around for a year? Is it going to be around for 2 years? Okay, is it going to be around for 3 years? Then let's say, okay, what's the worst that inflation could probably get? Well, with the Fed actions, I'd say probably about where it's at. So let's just say the worst could be 9%. Here's the thing. Let's just talk about worst case scenario. And I'm going to show you how to beat this. But first, we got to really understand this, because people's fears aren't real. They're made up. It's because of you're conforming to what other people want you to believe. And that's okay. We're all worried about inflation for our own reasons. But I want to explain the worst case scenario, 9%. Worst case scenario, I think. I hope. 9%. Anyone think it's going to go higher than 9? Anyone? Anyone? If somebody does, I can raise this. It doesn't matter. So if inflation was 9% for the next year, that means that every dollar you make is worth 9% less than it is today. So let's assume you got money in a bank account. Okay. Let's say you're using a savings account that pays you 1%. Most of you probably don't even have one paying 1%, but pretty soon they'll increase their savings rates. So let's say you're earning 1% and you're losing 9%. What's the worst? You lost 8%. So what's the option? What alternative does the masses tell you to do? What do they want you to conform to do? So what is the big thing that we were hearing when inflation was roaring and there was no talk of a recession? Stocks. For years when inflation was going on, because it has been building for a little bit, stocks, risky assets. Put your money in stocks. That'll beat inflation. Where are you at now? Okay, and I might be off a little bit by today, but let's just say you're down 23%. How many of you would rather lose 8 versus 23? Seriously. False evidence appearing real. That's fear. Okay. I mean, come on, this is just math, folks. Would you rather lose 8% or would you rather lose 23? Okay, so what was the second thing people said? Oh, crypto, it's non-correlated. Like crypto is definitely not going to follow the markets down. How far are we down? Okay, so let's just say crypto, I don't know. I'm going to be nice and just pretend you didn't buy at the top. You're down 30. You'd rather be down 8% than 30, right? Real estate. Okay. So we can make a really strong argument that real estate is a good place to put money, but a lot of people don't understand real estate. A lot of people don't understand the pitfalls in real estate. They don't understand the ways you lose money in real estate. So real estate, you can lose. So there's a lot of different ways to play real estate. You can wholesale real estate, which would be a good strategy if you got the time to do it, because it's very time intensive. Because wholesaling is I buy, I'm going to pick on Lloyd. I buy Lloyd's property. I put it under contract for a really good price. Then I go to Mark and I say, hey, Mark, I bought Lloyd's property for $200,000. It's worth $400,000. Do you want it for $250,000? Mark says, yeah, I'll take it for $250,000. I give Mark the piece of paper. We assign the contract. I made $50,000. Sounds simple. And they make it sound really simple, all the guys that teach it. And we've got somebody coming July 30th and the 31st who is an absolute expert in wholesaling, Justin Colby. And he will tell you that that is not easy. And then you can screw that up all really bad. But you know what that is? That's transactional. You got to do a deal to make $1. So you made 50 grand. Good for you. When are you going to do your next deal? Who knows? You're always got to do deals. You're constantly working. If you don't have the time to do that, that's off the table. Strategy 1 gone. How about flipping? I certainly wouldn't flip into this environment. I'm doing my last couple right now, but if you're flipping right now, you are out of time. I did this morning. You are out of time. So flipping would be a bad strategy. How about rental? Rental is a great strategy. And the number one thing being talked about, you can buy properties and rent them. And I will tell you right now, wholeheartedly, if you bought a property today and you rent it, your rents more than likely will go up, because there's going to be a massive demand for rentals, especially C's and B's, which are the lower class rentals, not the ones that you bring your friends and family over to see your awesome apartment building. These are the ones you're like, yeah, I own that one, yeah, but no, we'll just keep driving at 60 miles an hour past it. But like those are the good ones that you're going to make money on. But is there going to be issues? Of course. Toilets are going to break, termites, mice, rats, roof leaks, windows break, tenants set things on fire, drug use, complaints from tenants. I mean, I could keep going on for days. Been doing this a long time. It's a pain in the ass. But can you make money in that? Yeah, but is it for everybody? No. So real estate, I would say, might be a way where you could beat inflation, but it's going to come at a cost of your freaking sanity in most cases. So now let's go back to this. A lot of people, 8's a better play. Next year, let's say it's down, inflation's down to 7, and then the year after it's down to 2. Inflation will give way to either stagflation or deflation, probably stag, then D. Okay, which basically means you're not going to need to worry about this too long. This is a temporary problem that we are trying to fix with long-term solutions. Why would you fix a temporary problem with a long-term risky solution? It's stupid. It's asinine. I'm going to say something I've never said. This would have been a better play. Just keep your money in a savings account. Clearly, you all know that that's never what I would tell you to do. That would have been a better play than almost every option that Wall Street and everybody else was telling you to do. Your advisor was telling you to buy stocks, risky assets, let's put your money in the markets because that'll beat inflation. Sell, sell, sell against the pain. Bad decision. You would have been better off losing the buying power versus the alternative risks that you and everybody else took. How could you beat inflation? Very simple right now. So is the savings account the best way? No. It doesn't matter what inflation looks like. It is always temporary. It always goes away or gives way to something, whether you consider it worse or better, stagflation or deflation, would be better for you if you knew how to play it. So inflation, how do you beat it? Well, write this down. And Shauna, can you type this in the chat? treasurydirect.gov. You hear me talking about these a lot. I don't get paid by the government for these, so don't you dare think that I'm making this suggestion for any other reason than it's smart. In May, they launched a brand new auction for the newest I bonds. Okay, these are government bonds, which means they are guaranteed by the full faith and credit of the U.S. government. Whether you believe in the U.S. government or not, doesn't matter. They're still probably not going to default on bonds because they hold the almighty printing press. They can print money to pay their interest. So, they're in bed with the Fed, just so you know. Tips, how much do they pay? 9.62%, or maybe it's 9.63, but is 9.62 better than 9% worst case? Is it better than 7? Is it better than 2? Yes, it is. But this is a temporary solution for a temporary problem. Temporary solution for a temporary problem is what we want to do. What else could you do? Well, you could move your money. How could you do that? Private money club. You could lend it out through private money club. How much are they paying right now? I don't know. I don't really have many deals on there right now, less than 12%. First secured. 12 better than 9? Yeah. 12 better than 7? Yeah. 12 better than 2? Yeah. Temporary solution for a temporary problem. How long are the private money club loans? 12 months, 6 months, 18 months. I never go longer than that. Is inflation going to go longer than 18 months? Most would probably say no. So time your solution to the problem instead of taking massive shifts and knee-jerk reactions to take long-term solutions for short-term problems. It's backwards. And a better way to do this, if you were going to move your money, well, hell, start with the infinite banking concept, because now you're making money twice. You're making 12 plus a spread. All right, so that's inflation. Everybody got that? Not hard. I've been telling people to go to treasurydirect.gov quite a bit. Yes, it's a government website. It's kind of a pain in the butt to navigate through, but once you find it, it's not hard. And just open an account. The problem with TIPS, the Treasury Inflation Protected Securities, is you can only buy $10,000 per person per entity. I called my bookkeeper. I said, Melissa, buy $10,000 in any of the companies where we have excess capital. I bought one for me. I bought one for Larissa. So I bought one for me and Larissa. I didn't buy one for Vivi yet. I probably should. Again, that's the first problem. What's the second problem? It's 401ks. Most people have them. And I don't care if it's a 403B. I don't care if you got a 457. I don't care if it's a TSA. Can we just call these qualified accounts? They're qualified accounts, retirement accounts. Can't take the money until 59 and a half. You are not in control of this money, because if you take it out prior to 59 and a half, they're going to ding you a 10% IRS penalty. And unless it's a Roth, you're going to be taxed. Okay, so you're really not in control. You don't have access to the money. So what could you do here? Well, all of you have logged into your 401k and you have had to pick some form of the mutual funds that they offer. And they classify them conservative, moderate, high risk. They got different classifications, stable value, cash. Not many cash accounts in 401ks, which is bizarre. So a lot of people say, well, there's nothing I can do with my 401k. Nonsense. Let's just say you got a $100,000 401k and you're contributing, you listen, so you're only doing 3% because that's, you get the match. So here's a really great strategy. Okay, follow with me. So you got yourself a 401k, you got $100,000. And you should have done this a little bit ago, but even now it's still good. What you should do is figure out what your cost base is. How much money did you put in and how much is in there? So if you got 100, let's just say, even after the loss, everybody wants to just focus on, well, I had 140 and now I only have 100. No, that's not the question. The question is how much did you put in and how much is in there today? I don't care what it was at the high. That's gone. Like, you lost that. You didn't listen. It's gone. The 40 grand, pretend that it was a donation to Wall Street. You got 100 grand, but you only put 90 in. So how much do you have left? You got a $10,000 gain. Let's keep that because that'll go away. So what would you do? Well, you'd go in and there's a place where you can transfer, okay? You can transfer the accounts. Now, this is only if you're nervous about this. You could take the 100 grand from whatever mutual funds and you could transfer it to stable value, to cash. Most 401ks will have the equivalent of a government treasury. It's like government money market, government bond, whatever. You can transfer the money from where it's at to these new ones, stable value, cash, government. That would preserve the money you have. This isn't a long-term solution, but this is going to preserve the money. You're not going to go down. If you did government bonds, maybe a little bit, but not a lot. And then what you do, you got 3% going in. Well, let's take that 3% and put it in the highest risk. Why? Because, hey, listen, if this is the market, here's the markets. This is where we were. Okay, that was the high point. Here's where we're at, down about 23%, depending on what you're invested in. And let's say we're going to go here. What would be the smartest thing to do here? Buy. Remember Warren Buffett, buy low. Okay, so 3% going in, or whatever your percentage is, every week or bi-weekly or however you're doing it, buy in. And what would you want to buy in? I don't know, just pick the S&P, pick the Dow Jones, whatever you pick, doesn't matter, throw darts. Pick one that you know, like, and understand and take that 3% and buy low, but you've already preserved the bulk. You don't want to give up any more of the gains you have. Does that make sense? Not hard, simple. People think just because they got a 401k and they're not in control that they can't preserve what they have. Sure you can. I just had this discussion with someone yesterday. They acted like this was the most difficult thing. I'm like, how hard is this? If you don't know how to log on and do this, call them. Oh, I'm too busy. Okay, well, you being too busy, that phone call cost you $10,000. You too busy now? You want to pay $10,000 for a phone call? Listen, folks, I'll get on a call with any one of you. Send me a check for $10,000 and I'll get on a phone call with you and I'll do it all for you. All you need to do is just give me authorization to talk to them. 10 grand, that's all it's going to cost you. Any takers? Anyone want that? Anyone? I don't think so. If anyone did, I mean, listen, I'm an optimist and also a capitalist. So like, listen, I would do it, but please don't do that. You can do this yourself. You don't need me, but you need somebody to do it. And that's you. You can do this stuff. I'm not selling anything to you. I'm just telling you how to do this stuff yourself. All right, so let's move on. What other problems do we have? Well, what do we invest in? Everybody wants to know, what do we invest in? Well, there's always the rock steady real estate. If you've got time or you can build a team, real estate for rental, probably not going to be a bad play, but here's the thing. If you buy a rental today, let's just say it's going to cost you $250 for a double. We'll just call this a 2-unit, okay? 250 might even be cheap in certain parts of the country, but 250 is what you pay for that rental. Next year, I just want you to understand something. It will not be worth 250. Let's say next year it's worth 180. And I'm just making numbers up here, folks. Don't get all caught up. I don't think it's going to go down that much. Let's just hear me out, okay? Are you okay with it? Are you okay with this? Let's say your rents are $2,000 a month. And after mortgage and everything, your net is $700 a month. Let's say this $700 a month didn't change, but the value of your property 2 years from now is 160. Are you okay with that? Okay. Are you okay with this? If the next year it's worth 100,000, are you okay with that? You're down $150,000. If this stayed the same, are you okay with that? Some people are saying yes. Great. This might be a great option. Okay. How about you don't want all the headaches of real estate? Well, how many, I mean, just a second ago, we got Robert. Let me just look here. We got Robert. Let's see, we got Andy. We got a couple of people that said, yeah, I'd be okay with that. All right. So let's just keep real estate on the table. I truly believe real estate is the greatest investment on earth, but it is also a freaking pain in the ass. There's nothing else I can say about it. If you're okay with the pain in the ass, great. Real estate's your thing. But you know what the best part is? What do you need to buy real estate? Well, that example, $250,000. If anyone's going to come to my trainings and listen to me, don't use that word, REIT, because it's toxic. I know all about them. I own one right now. Like, they're everything you don't want. We want to buy this real estate because it's going to produce $700 a month. We're okay with the long haul. We just need this. What do you need? You need 250 grand. So what's the first place you're going to go? The bank. The bank says no. Okay. So the bank says no. The Fed just sucked all the money out. We're not giving it to you. You don't fit the little square box. Great. Where do you go next? Well, you could go to a hard money lender, but when all the money starts seizing, I bet you a lot of these guys start going away. So let's say you can't buy that. Let's say you're deep into the recession and you're able to buy this rental for 180. Okay. You're getting this thing 50, 60, 70,000 off of its high. Good deal, right? Maybe, maybe not. It doesn't matter. If you can't get the money, what are you going to do? Nothing. You're going to miss the opportunity. So, other side of the coin, guess what there's going to be? You see, when a recession happens, money doesn't disappear. It just changes hands. Money never disappears. I want you to be clear. Just because you are down 70% in Ethereum doesn't mean that money evaporated. It just means one person made 70%, you lost 70%. That's all. One made, one lost. There's no money lost. There's only exchange of money who has control of it. So during this recession, there will be a whole bunch of people that have a whole bunch of money and they got nowhere to put their money. But then there's going to be a whole bunch of people out there buying real estate that need money. So the people that need money get together with the people that have money. Now you got yourself a cool little freaking party. Now that's a community you want to be part of. Whether you need money or you have money, you two need to be meeting each other. You two need to be hanging out, partying, building a relationship. Because you know what? This relationship could result in another one. As my daughter always says, another. She says it way cuter than me, but another, like candy and things. But like, I'm sure some of you are like, another. Yes, each one of these, $700, 700. This one's a dog, 300, 700. You adding this all up, starting to look pretty good from a monthly standpoint. But none of this happens without the money. And when the banks dry up and the hard money lenders start to kind of be skittish about giving you the easy money that they had, guess where you're going to turn? Your neighbors, your coworkers, your friends, your family, private money. So these people, okay, if interest rates go up, these people might charge 15%. So if you needed 180 grand and it was going to cost you 15%, but you were going to make that, and let's just say that's the net, is that worth 15? Cost is only an issue in the absence of value. Folks, listen, I created this, the community, the dating site for people with money and people that need money. Like, this is a way to make money. This will beat the markets. This will securitize your money if you do it right. This is a great strategy. Do you know why I know that? Because I've been doing it for a while. Do you know why I'm doing it? Because all my wealthy friends do it. They own nothing, but they control everything. And there's more to that. You have to come to the July event. Solomon's going to teach you about how to own nothing, but control everything. Well, here, when you got the money, you have the ability to control the real estate. When this person doesn't pay this person now takes the property back. They're in control. You don't have to own the real estate. You don't have to deal with the termites, the taxes, the tenants, the broken toilets. You can just control it all because you came with the money. So folks, if anyone's interested, like Private Money Club is the solution for that. It's your dating site for money. But whether you're on either side, a lot of you are like salivating, looking at the real estate. That's great for some of you. For the rest of you, why don't you just be the bank? Okay. Why don't you just be the bank and lend money to the people that need money? Clearly on here, we got a whole bunch of people that need money and we got a whole bunch of people that have money. They just all exist in one place now. It never was like that. You got to change where your money goes first. You always hear me about this. I just did a webinar last night for Steven's show. Okay, the infinite banking concept. What is that? Just the circle. That's all it is. Money is in your control, goes over here to this Private Money Club. We'll just do for lending, maybe stocks for some of you, maybe crypto for some of you. I don't know, maybe some of you are car collectors, so we'll draw a car on here. These are all places you can put money. So in order to have all these, we need money. So why not put the money in our own banking system? What is that banking system? You all know it's that specially designed and engineered whole life that I'm always talking about. That video that we played earlier talks all about this. Why would I change where my money goes first? Well, first off, remember all those headwinds? Most of those headwinds don't exist in this bucket, okay? It's tax-free. It's guaranteed. It's liquid. You control it. You can use it immediately in the next 30 days. Like why else? I don't know. How about 5 to 6% interest? Some people are like, oh, I get this question a lot. And maybe some of you asked this. Some of you asked me, or someone asked me, they said, does the whole life policy beat inflation? You know what my answer was? Nope. By the math, 8.6% beat 6. And that was it. That's all he wanted to hear. Do you know why? He's trying to buy a product. Trying to buy a product. He was putting all the emphasis on this stupid product called a whole life. Let's get rid of IBC because now we're just talking about the product. People can rationalize a product. They can rationalize a can of soup. They can rationalize buying a product, but it's not the product that beats inflation. It's not the product that makes you wealthy. It's the process. The process is called the infinite banking concept. You know what it is? Sum up. A lot of people are like, well, what is the infinite banking concept? Here it is. It is simply a process that allows you to take back the banking functions in your life. That's how you become wealthy. You become wealthy when you stop relying on other people's banks. You become wealthy when you control your money, the flow of your money, and what your money can do for you. You become wealthy when you take back the banking functions in your life. The product, all we're going to do is we're going to take your money, we're going to move it in, and we're going to move it out. That's it. Okay? Money goes in, money goes out. That's all we're doing. It's the product. Why? It's a machine. Okay? Picture, oh gosh, what would be a machine that you put stuff in and it spits it out the other side in a different form? Whatever. Just think of any machine you've ever seen, like a combine, where something goes in it and spits out a different form, like the end product. Combine. Wheat goes in it, spits it out. You know, whatever. That's maybe a bad example, but that's all the product is. It's your machine, your combine. The money goes in and it goes out. Why would we do that? Uninterrupted compound interest. Because your money, when it goes here, it never leaves here, and it always continues to earn interest and dividends. Doesn't matter. That's it. It always continues to make that. The inner workings of how it works, you can get into the weeds on that. You can book a call with us. We can talk about that. You put money in, it makes 5 or 6%. You move the money out in the form of a loan. The insurance company gives you part of your death benefit early. They charge you 4. Who's making money? You are. It's a spread. Is the insurance company making money? Yeah, they're making 4%. Plus they're making the fees, which are the cost of insurance and the policy service fee. But who's winning? You are. And sometimes the difference between winning and losing is a very fine margin. The difference between winning and losing when it comes to money is called a spread. That's how you win. 6 minus 4, winner. Winner, chicken dinner. You took back the banking function, so you do the same thing a bank does. But then how do you even win bigger? You take that money and you make it go to work. When you take money from the policy, it has to go to work. Real estate, lending, stocks, crypto, cars, whatever. And when all this is winning, winning is in the form of interest, dividends, profits. Where does the interest, dividends, and profit go? Well, shit, at this point, you created your own bank. Why would you ever put it in somebody else's bank? The money goes from whatever this return is back to your bank. Rinse and repeat the whole time. You're making uninterrupted compound interest. You can't lose this game. No one on here can lose this game. You want something that's certain that you will always win? I just showed it to you. It's the ultimate. But it's not the solution for everything. It's the solution for where your money goes first. That's it. This is just where your money goes first. This is the important part. Private Money Club. Okay, solve that problem. Okay, we got 10-10 options trading, which is the stocks. If you want to learn how to make money, we got that solved. All of these people teaching all of this stuff are going to be here in July. The question is, are you going to be here? Well, I got something really special. We've got a very special offer that Shauna gave me the green light to do. So what we're going to do is we're going to invite all of you here to Buffalo for July 30th and 31st. Now, who wants to come to Buffalo? I get it. I get it. But let's make it worth it. Let's say you come to Buffalo. You're going to leave here with tactical ways to do all of this, bringing the best speakers in from across the country on these topics that I just went over. We're going to drill it in. We're going to give you tactical ways to do it. Some of you are like, I'm too busy to do all this stuff. That's confusing. Great. What if somebody did it all for you? What if you had a fractional CFO that you had that did everything for you? You just told them what you like, what you know, and what you want to invest in, and they just helped you do it. Well, that exists too. You got to be here to learn about this stuff. I can't just, we can keep doing this like this, you know, on this virtual stuff. This is great, but eventually, like, let's shake hands. I can't bring you everybody in one place like I can in a live event. So come on out. So here's the deal. What's today? Today's the 6th. You got a couple days to make a decision. You got from today until the 10th. Today till the 10th. 4 days. That's it. 4 days. Now, what I'm going to offer you may seem great because you're looking at price, but it might not be great because you're going to be in the back. The only reason we could do this is where we're doing the event. We had a little extra room we weren't going to use. It's not the most ideal room. If you want to sit like front and center, great. Grab a VIP ticket. Great. Grab a regular, premier seat, which is $297. But today till the 10th, To whoever takes advantage of this, Sean is going to put the link up, $97. You might be standing. I don't know what to tell you. You might be sitting somewhere or you're in the nosebleeds because it literally is stadium seating. We have a little extra seating that we weren't going to use. Now we are, but you're getting them for $97. They're not going to be glorified seats, but you know what? Everybody wants a deal. Here's your deal. $297 marked down to $97 till the 10th. If you already have a $297 ticket, trust me, don't exchange. You don't like the $97 seats are for those that like really, really want to come, but they were like literally, I don't know if I can spend $297. Great. Well, now you can spend $97. It's cheaper than the virtual seats, which are $197. So get your tickets. Sean is putting the link up right there. I'm serious. This ends the 10th. Will not go longer than that. Okay. Because I'm not trying to do this a lot. And really, there's not really that much space for this. So we figured we'd try it out once. If it works, great. Any of you that already have tickets, you already got a phone call. We sweetened your deal. We're not sweetening the deal for the $97, but $297, you just got offered something that we weren't going to do. Now you can. It's only for $297 in VIP. And VIP, folks, listen, like you're going to spend an evening with me and all the other speakers at a ball game in a really badass suite, watching fireworks, eating popcorn, drinking sodas and beverages and whatever the hell you want. We're going to take a limo there. We're going to take a limo back. How much is that worth? One-on-one time with me and every speaker. What is that worth? The price is $997. Is that worth it? Okay. Yes, you got to get a ticket here. Okay. Is Buffalo Airport hard to get in and out of? Not at all. It's super easy. It's a great little airport. They just renovated the whole damn thing. Awesome airport. Matter of fact, it's a lot of times like it's on time, unlike Detroit, unlike Chicago, unlike Atlanta. Those hubs are a pain in the ass. Buffalo, not. Easy airport. I don't know how else to really solve your problems outside of put you in the place where your problem gets solved. And at that event, we're going to be offering something I've never done. It's only going to be offered to 4 people. I'm not even going to tell you, but you're not going to know about it if you don't come. Think about that. Only 4 people are going to have the opportunity to do something when they come to this event. It's crazy. That's right. Only 4 of you. I keep talking about this blueprint process. That's going to launch at the event. So a lot of people are asking, what about blueprint? Yeah, that's going to be launched at the event. You're going to hear all about the blueprint process in the fractional CFO. But you got to be there to hear about it first. And there's power to that. So this process is called the infinite banking concept, pioneered by R. Nelson Nash. Okay. This is one of the most powerful things I've ever seen. And I'm not saying that just because, yeah, we sell the whole lives. Listen, I don't care who you do this, just get on this wagon. This is the reason I'm sitting here. The reason I'm doing this training is solely because I learned this, which opened my eyes. Because prior to me learning this, you know what I did? All the other stuff. I was a financial advisor. I made money selling stocks, bonds. I made money charging management fees on portfolios of things that I controlled, not my clients. I made money whether you made money or lost money. In 2008, when the market was tanking, I still got paid. I got paid on a lower base, which sucked, but I still got paid. You lost 30 and I still got paid. That's what happens when you give up control of your money. I no longer do the Wall Street stuff. I teach what the wealthy do because the wealthy play a different game. The wealthy 100% are playing the real estate game. The wealthiest are 100% playing the private lending game. Guess who's lending all the money on all those institutional hard money lenders? These people are. They're playing a different game than you are, but you can play the same damn game. Let's go back to this. Okay, the 401k. How many of you are going to take action on this with your TSP, your 403b, your 457, your qualified monies? How many of you are going to actually take action on this? How many of you understood the airplane thing that I did earlier? The headwinds you don't control, the tailwinds you do. How many of you want to control those? This isn't rocket science. Okay, this isn't difficult stuff. You have the ability to fully control every aspect of your money. And you have the ability to control also things like your cars. This is one of the first cars I used this for. It was an Audi S4 Avant. It was a sweet car back in the day. This is right before or at about the same time I was kind of just about to lose everything because I went deep into real estate, but there was things I didn't know. But I did finance this car using this system. This is the driveway of my dream house. Back then, mine and Larissa's 171 Radcliffe, which we ended up having to sell. But I did a video teaching you all about how to get all the money back for all these cars. You guys have probably seen this, but that's using that system. So these are the 3 cars that are in the YouTube video. But all I want to do is I just want to walk you through the numbers. So the way we all buy cars today, and the way we've always been taught to, a lot of you finance your cars. And if you finance your cars, you're paying whatever the interest rate is, 5, 3, 4.5. I just went over, I just humor myself to the Porsche dealer, and I just asked him, I said, so what are finance rates today? He said 5.4. So we're getting back to these levels here that we were actually higher than that, 5.4. So anyway, if I had done regular financing all these cars, I would have given a lot of money, but I didn't. See, I financed these cars through my banking systems. And you guys can see the numbers, whether you can see them or not. It really doesn't matter. Okay. I just want you to follow what's going on. This is one of my banking policies. I put $18,000 a year into it. That's my premium deposit. Okay. That's how much money I put in. It took some time for me to capitalize this system to be able to buy this car. See this date? 4/6/2008. Rough. That was an Audi A8. I ended up having to sell it, but $18,000 was going in. I paid 20 grand for the car. When I bought the car, I paid 20 grand for it, and I made payments, the equivalent of whatever that was, like 400 and some change, 5,000 bucks a year back to my banking policy. Now, if I had kept that car the full 5 years, I would have gotten 89 cents back for every dollar that I paid for the car. Now, I didn't keep the car for that, but that's a whole nother story. 89 cents of every single dollar for this Audi A8 would have came back to me, and I still owned the car. Again, I already told you I sold the car, but like, you don't know a way to get 89 cents back for every car without selling it. You just learn. This is uninterrupted compound interest. This is the infinite banking concept. You just paying yourself back. And then I did it again. You see, but the best part is kind of like fine wine. The longer you do this, the better it gets. There's that car I pulled up a photo of. Audi S4 Avant. That was a badass car. V8 engine, sweet. Same thing, same policy, 8th year, 45 grand that bad boy cost me. Jeez, I don't even know what that would be worth today, but way more. And then my monthly payments were pretty high, 10,500 a year. So when I paid that back, and again, I ended up selling this car. This was around that 2014 mark, but if I hadn't and I kept it, I would have made $1.53 for every dollar I spent. So for every dollar I paid for that car, so $45,000 for every one of those dollars, I would have got paid 53 cents for every dollar I paid. Does that make sense? $1 gets me back $1.53, and I didn't have to sell the car to get that. Why? I took back the banking functions in my life, folks. I paid myself interest instead of paying the bank, and the whole time I earn uninterrupted compound interest. Now we're getting a little bit closer to I got to redo this because now I've got 1, 2, 3 new cars that I can tell stories on. But this was back when Vivi was born, so a little over 2 years ago. It's a Porsche Cayenne hybrid, or S hybrid, Cayenne S hybrid, pretty sweet car. Paid 63 grand for that car. And I did finance this. I think we kept this car, if I'm not mistaken, 2 years, that would be right. 2 years, because Vivi's 2. So kept it 2 years, felt like longer. But then I ended up trading in on her new Mercedes, which is still financed through the same system. So it's all the same thing. The car might change, but the system and the money doesn't. So this car, 5 years, which is going into the future now, same policy, paid 63 grand. If I had kept this car, or we could just go to the Mercedes because it's basically the same, for every dollar I paid for that Porsche, I get $3.22 back. I didn't have to sell the car. So folks, when you really look at the power of that system, the banking system, become your own bank, this is what it looked like. 3 different vehicles in that example. And interest, we're not there yet because we're still working on the 5 years from this one. It just, the car changed. It's now a Mercedes GLS 550, but $16,481 came back to me in my banking system. And I didn't do anything different, folks, except for where my money went first. That's all I did different. I would have made monthly payments to someone else anyway, because I wanted the cars, just like all of you. I changed where the money went first and who got the monthly payments. And because of that, I made $16,481 just in interest. Then when I sold the cars, that's all just profit on top. This is what being your own bank looks like, folks. And I just do the car thing because it's simple and because you all understand it. I would have given $16,481 away. There's the math. Okay. The Audi was $875 a month, $10,500 a year, $3,806 would have been given away to XYZ Bank. The Porsche at 4.5%, $1,084 a month. Interest would have been $9,758. We don't even think about this because we got the car. We think about the product. We don't think about what we're giving up to have the product. That's what you're giving up. $9,758. Plus the car depreciates. So you're losing twice where I just showed you how to win twice. You get the car, you fully control the money, and you get all the interest back. And the whole time, all these different cars, I got paid interest on that money the entire time it was out there working. Folks, like, listen, there's not just one way to make your money work for you. There's many ways to make your money work for you. I showed you real estate. I showed you private lending. I showed you cars. We could keep going on and on and on. It's infinite in the number of ways you can use this. Protect and preserve your wealth today because you're going to need it in the next couple of years. Because in the next couple of years, you're not going to need it to survive. I hope not. You're going to need it to take advantage of all the opportunities. It's going to be like that Family Guy episode where Peter's walking around. Ooh, piece of candy. Ooh, piece of candy. Ooh, piece of candy. That's going to be you. You're going to be Peter from Family Guy. You're going to be like, ooh, piece of candy. Ooh, piece of candy. Because everything's going to be on freaking sale. And you are going to be one of the few, the 5% that actually has money to take advantage of those pieces of candy. Or the flip side, you can do nothing. You can not come to the July event. You can just keep doing what you're doing today. You can keep listening to the gurus and the talking heads and the media and just keep doing everything they tell you to do. And guess what? In a couple of years, you're going to say these exact words. Repeat these after me because I want to burn this into your mind. I should have, I could have, I would have. Let's say it again. I should have, I could have, I would have. Again, I should have, I could have, I would have. Again, I should have, I could have, I would have. Say it with conviction because that's the last time you're ever going to say those words. You're never going to say that again. Because in a couple of years, you're only going to hear other people say that and you're going to feel bad for them, but you're going to realize that that could have been you, but it wasn't because you made a change now. You made a change now, and that change will forever change your financial future, your family's financial future, the kids that you don't even know, the grandkids that you will never meet because you will be long gone to a better place. They will remember your name because you created your own banking system, and that banking system left a legacy when you were gone that made their lives better and allowed them to live at a higher standard than you. Enjoy things, do things, help people because they have the resources to help people. Somebody on What the F Happened this morning literally said something like, people with money have no soul. And I said, you know what? People with money are the ones trying to solve child sex trafficking because without money, that doesn't get fixed. Without money, you don't hear the stories of the 100 kids that were in the semi, often probably never see their families again, that dude with the Patriot eyeball, my hero, kicked some ass, took some names, and saved those children. Does that happen without money? You think money doesn't have a soul? You think people without money doesn't have a soul? You think money's evil? Fuck that. Money solves problems. Are there evil people with money? Yes, discount them. This isn't about them. It's about you and the game you play. Without money, you can't solve other people's problems. You can make them laugh, but the real problems, the child sex trafficking, all the things, the world hunger, all these things take money, and it's your job to go out there and make more of it to solve more problems. Because the more problems you solve, the more money you make. You think that guy with the glass eyeball isn't being taken care of for his noble hero work and what he's doing to save those children? I don't care what side of the fence you're on, man. I got a 2-year-old daughter. I would do anything to make sure that she never disappeared, to make sure she never ended up there. And if she did, just like any of you that are parents, you'd go to the end of the world and back to make sure that you found your son or daughter and you'd make sure that those people were punished. Well, that all takes money. Planes take money, cars take money, fuel takes money, travel takes money, searching takes money, research takes money. It all takes money. Don't make money evil. It's just a tool. Robin said, do you not see the stock market coming back up anytime in the near future? No, I do not. That's a simple answer. And that's a wholehearted, honest to goodness answer. The market is not coming back before it goes down. You might see a couple of glimmering hopes of it kind of coming back. That's institutions propping it up. That's last hopes. You know, it's not coming back. Don't get tricked. Okay. Don't like get tricked that it's going to back. The government's printing press is broken. They got to fix another problem. The eyes are off the printing press. Jeff said, what's the difference between whole life and IUL? Which one's better? They're totally different. For everything that I just mentioned, you have to have liquidity. You have to be able to put money into the machine, which is the whole life, and then take that money out immediately to make that money go to work. An IUL doesn't work that way. An IUL has surrender fees. So if you put the money in an IUL and you want to take that money out, you can't because of the surrender fee. Unless you get a really good agent. I only know of two out of all of them that know how to do this because they're willing to give up 92% of their commission the same way we give up commission to build the whole lives that we do. Okay. Secondarily, IULs get more expensive as time goes by. Whole life, level cost of insurance. So do you want the product that gets more expensive the older you get, or do you want the product that never gets more expensive? I'll let you answer that. Number 3, Jeff, why in God's green earth, or why in the hell would you ever put your money in a vehicle, IUL, that relies on market participation based on the index? Okay. You don't own the index. A lot of people, I had somebody say this and I wanted to slap them. They said to me, yeah, but with an IUL, you're buying low as the market goes down. No, you're not. You don't own the stocks. That's why non-licensed brokers and non-licensed agents peddle IULs to you, because they don't have security licenses, because you're not buying a security. You know who owns the index fund? You know who owns the investment? The insurance company. You are just participating in the gains. So you want to put your money in an IUL. Great. Why? Oh, because the guy said I can make 8-9%. When? A year ago? 2 years ago? 3 years ago? Yeah, maybe. Now the markets are going down. You're making 0. Oh, no. Mine has a floor of 0.7. You're still making 0 because there's fees, there's costs to run the IUL. Matter of fact, every IUL right now, guess what they're doing? Losing money. Every whole life right now, making money. Which one do you want? Sorry, I didn't mean to be so harsh on you, Jeff, but damn, I hate IULs right now. So don't I have to have money up front either way? So to borrow from your policy, I have to put money in the policy first. Yeah, I don't think we've figured out money trees yet. Does anyone have a tree that grows money? No, I didn't. If you do, please tell me. Like, we'll scrap everything I teach and we're just going to teach people how to plant the tree that grows money, if you know. So yes, you need to have some money and save money. There's 6 laws of wealth. Listen closely. And this is for Anonymous. I'm answering this question. So I'm just having some fun with this. I'm not picking on anybody. So Anonymous, I have to have money to put money in the policy first. Yes. Okay. Law number 1. Law number 1, before anything else can happen, the first law of wealth is you have to save 1/10 of the money you earn. Some people would say, well, I can't. I'm living paycheck to paycheck. Well, then go get a second job. Do more. Solve more problems. Be more. You're living paycheck to paycheck because every dollar you make, you spend. Stop that. Do a budget. Figure out where all your money's going. And the only way to get out of a paycheck to paycheck scenario is to change the paycheck to paycheck. So how are you going to do that? Get a second job temporarily. We got to get over that hump. And when you get the second job, every dollar you make in that second job, you don't spend it. It goes to pay down the reasons that you are living paycheck to paycheck. The more you pay them down and the faster you pay them down and the faster you recycle and recapture the money, the faster you're not going to be living paycheck to paycheck. Then you're going to have money to save in that system. And you're going to have more and more money to save because the more you pay down, the more money you recycle and recapture. In other words, if you were given Visa $100 a month in interest payments, you're giving that to Visa. Let's say we pay off Visa with this second job that you don't want to do, but you know what? Tough luck. Life's tough. Get a second job and you take that money from the second job, you pay off Visa. Then you take the $100 you were given to Visa, which is probably north of 20% interest, and you put that money back in your banking system, or let's just say back in your account. Now you got an extra $100 every single month that you didn't have because you used to give it away. Now you start learning. Once you got that extra $100, let's send that 100 back to work so that money can then go make $200 and $300 and $400. So what's the solution? If you don't have any money, you're living paycheck to paycheck, do what other people are unwilling to do. Look at all the other people that are bitching and moaning that they're living paycheck to paycheck. How did the ones that used to live paycheck to paycheck that are now wealthy or doing better, how did they do it? Follow that person. Don't listen to the other people living paycheck to paycheck because they don't know how to fix the problem that you have. Follow the people that have fixed the problem. How did they do it? They probably got a second job. They probably did more. They went to their boss and they said, what more can I do to make extra money? And they took the extra money and then they worked on the problem. No one's coming to save the day. Oh, the government's going to pay off my student loan debt. Yeah, I doubt it unless they're trying to buy your votes. And if they do pay your student loan debt off, what do you think is going to happen? You're going to give it all back because they're going to find a way to tax the living shit out of you to pay back your student loans that they paid off for you. There's no free lunch. But keep telling yourself that you don't have any money. Keep telling yourself, oh my God, life's hard. I'm living paycheck to paycheck. And guess what 2 years from now will be? You'll be living paycheck to paycheck. Life will be hard and you'll be no further ahead. The truth hurts, folks. I'm not sitting here trying to candy coat anything because I don't give a shit. I'm trying to solve your money problems, your family's money problems, and I'm trying to put you in a better place. You don't like what I have to say? Go somewhere else. What is the cost to you to help set up a system having 90% available within the first month? I'll have 44 available to start. Donald, you're going to love this answer, zero. The cost is the $44,000 you have, but it's not a cost, it's a deposit. The only check you'll ever write is the deposit you make into your bank. You don't pay us. We don't charge anything. We get paid by the insurance company. They pay us like crap for every $10,000 you put into the specially designed whole life, the one that's going to give you 90% available. And just to quantify that, that would be the Mass Mutual HECV plan that you hear me talk about a lot, the same one I have and the one I was showing, 90+% in the first year. So if you want that plan, we get paid by Mass Mutual a commission. The commission works out to be roughly $387 per $10,000 you put in. So how much will we get paid? Not from you, Don. It'll be from the insurance company. Is you got 44 grand. So let's just pretend it's 40. I get paid $387 per $10,000. And it's probably going to be less because we probably would design it even different. Because if you had 44 grand, we'd probably do a dump in. And then I would make, let's see, 2 times 4. I'd make $800. So I would get paid $800 from the insurance company. You would pay nothing to me, nothing to Money Multiplier, and you would have access to exactly what you just said in the first 30 days. Okay. Oh, and by the way, Donald, book a call with us and we can talk more about that. Shauna, can you put the link up to book a call? Any questions, folks? I see a ton of questions coming through in the chats. Can you please put them over in the Q&As? I want to answer them. Will the virtual spots get access to the blueprint? Yes, you will. So Francisco, if you can't come here personally and you want to do the virtual, we got a whole to-do we're doing virtually. We haven't just talked about it because I'm trying to get people to come live because I want to shake some hands. I want to give some hugs. Like, it's been a while. The COVID made it so we couldn't really see people. So I kind of want to get some bodies here so that we can hang out. But if you can't hang out, we can do it virtually. They're $197 tickets and you're going to have access to everything the people live do. You're just not going to be sitting in the seats, rubbing elbows, chatting, hanging out, having cocktails, doing a baseball game, watching fireworks. None of that's going to be there, but you're going to get access to Blueprint. You're going to get access to that one thing I'm going to do and offer for only 4 people. So the answer is yes. How much uninterrupted compound interest can you receive with the infinite banking concept? Well, a lot. It depends on the policy and depends on how long you're into it, but I could show you Kevin's policy. Let me just see it here. Okay. So Des, here's kind of what you were asking. So this is a real policy. This guy's name's Kevin. He's a real client of ours. He's 38 years old. We set up one of those fancy high cash value plans for him. He dumped, this is kind of like Don's plan. He dumped 50 grand in, and then he did $491 a month deposits, premium deposits. So the uninterrupted compound interest for this particular policy, if you're looking at it, look at the cash on cash return. So this would be the interest that you earn on your deposits each and every year. So, and I did this in 5-year increments, but you know, the second year he puts in $58.95. The first year he put 50,000 as a dump in and then $58.95. And he had access to $51,554. For those of you that are grabbing your calculator, I'll do the math. It's a little over 92% he had access to. Okay, the second year he makes his deposits. Let's just go for the $58.95 for getting, you know, can't do it monthly. So he's got $58.95 he puts in, and how much can he take out at the end of the year? $71.41. That's $1,246 that he made in uninterrupted compound interest. Because the thing I want everybody to understand, if Kevin had taken in the first year $51,000 out of his plan and given it to Des, let's just say Des borrowed $51,554 from this Kevin guy's policy. How much money is still in Kevin's policy earning interest and dividends uninterrupted? If any of you are looking at the math, The 50 plus the 58.95. That's correct. None of his money left his account, even though he took 92% of it out and lent it out to Des. So that's uninterrupted compound interest. Second year, puts 58.95 in, can take 71.41 out. Made 1,246. That's a 21% cash on cash return, not cumulative, cash on cash. It's the only way we do the math on these, because every year we're going to use the money. So Des, then you can see here, 26, 54, 115, 191. These are your cash on cash returns that are all due to uninterrupted compound interest. And every year, if you look at this column here, the non-guaranteed cash value increase, if every year you took this money out, every year, you took 71 out, took 74 out, took 91 out, took 11 out, it doesn't matter. Now, is he going to be charged interest on the loans he takes? Yes, 4%. So how many of you would be okay giving the insurance company 4% when you made 21 that year? Anyone? Anyone have a problem with that? Because I don't. 21 minus 4 equals good return. 26 minus 4, good return. 54, yeah, 50%, sign me up. 115 minus 4, shit. I only made 111%. Man, the insurance company's killing me. Folks, I'm winning. The insurance company's always going to win. They're a profit institution. That's why they're around. That's why you want them to hold your money, because they're smarter than you. They're smarter than me. They know how money works. They know how to make money. So don't fault them for paying them 4%. Don't get mad at them because they charge you 4 and pay you 21% uninterrupted compound interest. Like, that's the thing. Like, sometimes I just can't comprehend why people have such a problem with the simple fact that, like, why would you mind if the insurance company made money when you're making money? You shouldn't ever mind that. Like, you can both win. That's winning, man. I don't know. Like, if you're not first, you're last. Kevin was first there, man. He's winning the race. So hopefully that helped. What other questions we got? So again, Sean, so if anyone wants, to book a call regarding the infinite banking concept and building these policies, kind of like what Don was talking about and what Des was talking about, right there is the link. Okay. You can go right there, that little link. We'll schedule a call. Yeah, so that's the proper link. That will schedule a call with one of us, either myself, Steven, Gabby. I mean, it's a round robin. So whoever's time you pick that's available probably won't get me because I have no time anymore. One of my biggest things that I'm struggling with, but you get a call with somebody and they'll be able to set you up because every one of us know how this works and every one of us use this, every one of us. So thanks, Don. Yeah, looking forward to building that. So again, Don, one thing you just want to tell them, because you've already told me, is tell them you want a high early cash value plan. Chances are, depending on how much you're putting in, it's going to be the Mass Mutual Heck Fee or the Lafayette Life Slayer. One of those two plan designs is probably what you're going to want. And then right there, folks, remember we said today's the 6th of July. Up until the 10th, you have the ability to buy those nosebleed seats for $97. Some people are sensitive. This is the only opportunity you're going to get tickets for the July event at a discount, $97. On the 10th, it's gone. It's done. And all of you, make sure if Raj called you, if you already have tickets, you call her back. You're going to like what she has to say. We gave you something pretty freaking valuable, and you're going to hopefully love it. So that's that. And then last but not least, Private Money Club. I'm just going to do a small little plug for 2 seconds. Private Money Club is my baby. It's my creation. It's kind of the one thing that I'm creating that I think is going to just explode. I think it's going to solve massive problems. And I think it's going to change the way that everything is done when it comes to getting money. I think in the future, just like Amazon changed the way we buy goods and services, I think Private Money Club is going to change the way you get money for all the things that you do, from cars to boats to even starting your business. It could potentially disrupt everything, because why would you borrow from the bank and go through that when you can help your neighbors, your friends, your coworkers? You can build relationships, and then those people, it's a win-win situation. You win because you get the money. They win because they're making money. It's win-win. So check out privatemoneyclub.com. Scope it out. Right now, there is no free option. You can't go in there and browse it. After October, you can go in, create a free account. Your free account will exist for 3 months. If you don't then go on to become a paid member, and you can't access anything as a free member, you can just browse. It's like, going into a candy store and you look through the glass cases. You want the candy, you want the coconut clusters and the chocolate covered strawberries, but you can't until you pay. When you pay, you get to enjoy the chocolate and the strawberries, or the coconut clusters, my favorites. So Private Money Club is that. Okay. It's a dating site for money. It will change everything. you might as well get to be part of it now versus later. And it will then, in October when we launch, some of you will be there to join us for this epic launch that we're going to do. And I look forward to seeing you all there. So hopefully you guys all enjoyed this training. Sorry, I was a little rough on some of you, but sometimes it's the tough love that counts, folks. Sometimes someone just needs to freaking slap you around and tell you the truth instead of candy coating it, making you feel good. I'm not here to make you feel good. I'm here to make you rich and wealthy. So if that's not the program you're wanting, if you just want to feel good and have someone blow a bunch of smoke up your ass, I'm not your guy. Go find someone to blow smoke up your ass, feel good, and be broke. This isn't the place. I'm here for one thing and one thing only, to change your financial future. I hope you enjoyed it. Thanks for joining us for another episode of Wealth Webinar. We will see you this afternoon. If I didn't get your questions, join us for the Ask Me Anything happy hour at 4:30, where we will have a beverage and answer all of your questions and have a hell of a good time. See you next time, folks. All right, so I hope you guys enjoyed that episode. We're putting up tons of them, but I think if you like this one, you'll probably like that video as well. Not only that, I've got a book that I created, Mapping Out the Millionaire Mystery, where we actually show you what the wealthy do in the game they play with money. I want you to have that for free. And if you want to know about all my new videos coming up, click that alert button. Actually, smash that alert button, and you'll be notified every time we put a new video. So we'll see you on the next episode.